Good morning and welcome to TipRanks News Bites. I'm Ari Gutman and our top news bites for you today, Tuesday, July 12th. Q2 earnings season is now officially underway. Major indexes are already beginning to lose their recently built momentum. Three Arrows Capital, one of the most prominent crypto hedge funds, is now filing for bankruptcy. And finally, China is closing major cities, impacting global economies once again, with several US companies actually on the firing lines of those closures. Now be sure to watch today's show through and through because you'll never believe what tactical investment changes one of the world's largest asset management firms is making to navigate through what they feel is an entirely new investment era. Well, just as momentum seemed to have been building up within the market as of recently, with the kickoff of Q2's earnings season, major indexes began retreating. After yesterday's session, the Dow shed by 0.5%, the S&P declined by 1.2%, the Nasdaq by 2.3%. Early this Tuesday morning, all futures are down. Now, some of the biggest companies reporting today, we have PepsiCo, Washington Federal, and AngioDynamics, just to name a few. But what remains very clear is that many investors across the board are expecting a volatile earnings season and have already prepared for companies to report less than favorable quarterly results, as companies have been navigating through a barrage of complexities, from inflationary pressures to rising interest rates and, of course, a recession that is now becoming seemingly inevitable. Jumping into the crypto news, the once prominent crypto hedge fund Three Arrows Capital is now heading into bankruptcy court. The hedge fund failed to meet margin calls from its various lenders that ultimately led to their recent bankruptcy filing. Now, Three Arrows had a rather riskier trading strategy, which involved borrowing capitals from across the industry, investing that capital into what they determined to be very promising crypto projects, and then, of course, returning profits. The strategy worked very well for about a decade, but now here we are with bankruptcy filings on the table. For a firm that was once managing just north of $10 billion in assets, they are now in the news spotlight for all the wrong reasons. And finally, on our global news front, while we've been reporting on China's recent COVID spikes and the likelihood of the re-implementation of COVID restrictions in China as well as more lockdowns, China officially moved to reimpose those restrictions as the COVID variant spreads throughout major cities and regions across China. While a zero COVID policy is of course ideal, the restrictions have their impact on both China's GDP and global economies, as well as companies will see another steep loss in sales, from Wynn Resorts and Las Vegas Sands to Nike and Starbucks, as well as Apple and Tesla, all of which saw a stock share price decline already. China's COVID situation is quick to shift, and investors are under the assumption that China will once again reopen soon. Now, in breaking TipRanks news, BlackRock, the world's largest asset manager with over $10 trillion under management, just cut their entire outlook for the stock market. BlackRock believes what they call a period of great moderation is over, and replacing it is, in their words, a regime of increased macro volatility and higher risk premia. Now, guiding their decision to tactically change their strategy were three key themes. The first being macro volatility driving market volatility, the second being the necessity to live with inflation, and the third, net zero emissions as we head into a greener future. Therefore, BlackRock began cutting exposure to developed market equities. Aside from Japanese stocks, the firm prefers equities over bonds in the long run as yields rise, but regarding the near term, BlackRock still feels that inflation-linked bonds are solid. BlackRock is also under the belief that central banks will live with higher inflation, pause, then change course on their rate rises, a boon for stocks that private markets are not going to be immune to in this new regime of higher volatility, but opportunities still exist in the eyes of BlackRock. Tip Rankers, that's our news for today. We would love to understand your thoughts on the current market conditions and what you're expecting for this earnings season. Feel free to leave a comment or two below. And as always, stay up to date, stay informed, and stay connected by joining us right here on TipRanks TV. All the shows you just cannot afford to miss. Now, until next time, thank you for tuning in.